What is going on, guys? What is going on? Let me know if you can hear me. Let me know if you can see me. A lot of craziness going on at market open, as usual. But today we have Jerome Powell and Janet Yellen at 10 a.m. Is the sound good? All right, good. Let me just announce this real quick. Live now. All right, guys. If you're on the stream, leave it a big fat thumbs up. So, not really much to remark on here except for that we have equal lows here on the indices. This goes for ES as well as NQ. They both have equal lows here. Now these equal lows are the Asia low and then the low that was put in after 8:30. So with that said, I do think that both ES and NQ will take those out. We did take out the highs today on both. This would normally be a short for me until we get to those lows, not a broad-based short because the high time frame does still look really bullish. So it would be, a short just to get down to these lows, but in 12 minutes, we have Jerome Powell testifying before Congress. Now, what's interesting about this testimony is, the Congress things, they're always a circus. But what's interesting about this testimony is they're probably going to hound him about interest rates, right? Like as the election nears, representatives from both parties are going to want to grill him on interest rates and when he's going to cut rates, et cetera, et cetera. So I think we will get quite a bit of potential movement as it relates to rates. And then we have CPI on Thursday. And I think what will happen most likely is we will get maybe some sort of contradictory stances, meaning, he will likely remain steadfast in bringing inflation down, maybe sound a bit hawkish, although in front of lawmakers, he tends to not sound as hawkish. But then if CPI comes in better than expected or as expected, we'll see another drop in rates and another drop in the dollar. So yeah, we'll see what happens here. I think that the 10-year, as I said before, rejected off of this weekly trend line here, and we saw a retracement, then we saw another rejection. I do think that if CPI comes in line once again, the 10-year will start to drop, right? And that goes for the dollar as well. So it'll be interesting to see what he sees here. In terms of trades, like I said, in normal circumstances, this buy-side liquidity sweep here, right? I would be looking for shorts down to the relative equal lows that were created on ES and NQ. Now, if one of them only had equal lows and the other one didn't, then I would take that divergence and not even look for a breach of lows. But the fact that both of them have those lows and there isn't a divergence lets me know that there is potentially, oh, this was last week, lets me know that there is potentially a possibility of them both taking out those lows, right? Duarte Machado, what's going on? R. Grove, Lewis, Jesse, Duan, Surf, Murph. Surf and Murph. Holy shit. Janos, Duan, Jonathan Chavez, Vegeta, Nardos. Nardos, are you Habeshi? I'm trying to figure out your last name. Kathy, retired today. Pichari, Aisha, what's going on? Don, Soner, Nick, Sashin, Regine, what's going on? Bjorn, Joe, what's going on, Joe? Jack. Oh, okay. I figured from your last name. Los Breezy, what's going on, dog? Tesla, surprise, another green day so far. If we can confirm above this 2-year trend line here, you can see it here. This 2-year trend line, we finally broke it. If we can confirm above, I think we are on a path, an easy path to 1 trillion. An easy path to 1 trillion. Nate Bennett says, hit the like button, you freeloaders. Shane, are you a DJ? There's a Shane that follows me on Instagram. I don't know if it's the same Shane. But there's a Shane that's a DJ that travels all over the world. Easiest market ever? Shit, I agree. If you woke up in 2023 and just long the market every morning, I mean, you'd probably be up 80% of the days. Shane Snedden says, no, that's not me. Hit the like button and share, says Trouble Man. Yes. Apple, very surprising move here. Every time I want to sell calls on Apple, it keeps going up. It is my largest holding. And this is insane. You know what's crazy is that we weren't even talking about trillion-dollar companies like that before the pandemic, right? Like I remember when Apple hit the 1 trillion, then the 2 trillion, and now we have $6 trillion companies, which is wild. About to be 7 if Tesla hits 318. Microsoft, Meta, Google, Amazon, Apple, Nvidia, multi-trillion-dollar companies. And I wonder, is Berkshire Hathaway a trillion-dollar company? Let me see. No, just shy of it, 885 billion. Jerome Powell will talk in 5 minutes. Jerome Powell will talk in 5 minutes. Let's see what's going on with RTY. Man, I think RTY is going to have an explosive move here. This type of coiling, I think RTY will finally have an explosive move. Dr. Jennifer Berry, what's going on? Appreciate your donation to St. Jude. Thank you so much. We had a fire-ass short on YM yesterday, and it is now continuing. Along that path after just touching the weekly level, which was also in a 1-hour gap. If we can clear yeah, I'll be interested in a potential long on YM. I want to see what happens at this low. What if everyone donated $1? You have a great point, Dr. Jennifer Berry. You have a great point. If everyone donated $1, these streams typically get, I don't know, 4,000 or 5,000 people total. That would be a ton of money. I like where your head's at. I certainly like where your head's at. Look, the rule is if I make you money, you got to donate $1, okay? I mean, you should probably donate $1 anyway. But especially if I make you money. Ooh, RTY looks interesting for a long too. RTY looks super interesting for a long here. It PO3'd into that 4-hour fair value gap. The only thing is we didn't mitigate it, meaning I would want it to take at least half of this. By the way, I'm almost done with the, I put together a free ICT/SMC course that I'm going to be uploading to YouTube soon. Just have my editor putting the finishing touches on it. So that should be up soon. And then Mastermind 7.0 starts tomorrow. So shout out to you guys that took advantage of the half-yearly sale, which was basically the Black Friday pricing for the Mastermind. We are starting Mastermind 7.0 tomorrow at 7 p.m. Eastern. We'll make the announcement on Discord. And if you want to apply to Mastermind 7.0, we are taking enrollments. You will see that link in the description if you're not already part of Mastermind. Yeah, NQ and ES here. Oh, there's a little bit of divergence here, isn't it? NQ making a lower high, ES making a higher high. Interesting. This is bearish divergence here. But we have Uncle Jerome talking. I hope they air it on CNBC. If you guys happen to catch it on YouTube, let's see.
Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber live from Post 9 of the New York Stock Exchange. Big day for the market with Fed Chair Powell and Treasury Secretary Janet Yellen both testifying on Capitol Hill this hour. We will take Q&A with Powell as soon as it begins. Ahead of that, we've got the S&P up 0.25%. What's leading? Technology again. Nvidia's up a nice 3.4%. Corning also has had a nice move higher this week, especially in Supermicro, Micron. So it's the usual suspects. Communication services at the top of the list too. Meta's up 1%. Alphabet all higher. Some of the media names.
Downward pressure on inflation. The committee, however, still seeking greater confidence inflation is declining before reducing rates. He quotes that part of the statement which says that. Then he uses the phrase more good data, he says, would strengthen our confidence that inflation is heading towards it. And he's really referring back to the most recent inflation reports we've had. Elevated inflation, he says, is not the only risk we face. So he's talking much more two-sidedly about.
Yeah, if you guys have a link on YouTube, I wonder if MSNBC will show the whole thing. But if you guys have a link on YouTube, send it my way.
The Fed chairman says, and the economy continues to expand at a solid pace, moderating in the first half after strong growth in the second half of last year. Here's what he sees on.
Anonymous donated $5 to St. Jude. Far from Unwound donated $20. Paolo donated $20. Appreciate you. Michael Wool donated as well, $1. Anonymous, 20 pounds. Wow. Ahmed donated $1. Appreciate you guys. And shout out to Dr. Jennifer Berry for starting a movement there.
They had gone into it with a 75% chance of one in September, 86% in November, and that second cut was trading at like a 75% probability for December.
Yep, Steve, I don't hear much in terms of a different message than what we got from him last week in Portugal. Do you?
I would say a nuance on the labor market. I would say in terms of the labor market cooling, but still strong. He's picking up on the recent employment report. Maybe a little bit more wide open. I think he took a step in Portugal. Maybe this is another step towards the idea of being open to that rate cut, though.
Okay, I found an actual feed of the testimony. So we'll see. We'll just continue to monitor it until they start. We'll see what's going on. All right. I'm really not interested in trying to front run a trade here. This right here is called seek and destroy conditions, right? It takes out stops on both sides, both longs and shorts. I mean, obviously you can catch a scalp here and there, but you're not going to catch a broad-based long here. I am interested in what happens here with YM.
Senate Committee on Banking, Housing, and Urban Affairs will come to order. Welcome, Chair Powell. Nice to have you back. Good to have you first this time of year.
Bro, I hate this guy so much.
No, Americans know that our economy fundamentally is not a fair playing field. Instead, we have a David and Goliath economy where the largest corporations use their power to funnel all the gains in the economy to the top, aided and abetted by too many people in this room. Corporations squeeze every last penny from Americans' pocketbooks and workers' paychecks. They don't even try to hide it anymore. The biggest corporations are charging more for less. Americans are frustrated. No, actually, Americans are pissed off. They have fewer and fewer choices. Those choices cost more and more. Keeping prices down is part of the Fed's mandate, but as many of us have made clear, the Fed's main tool to combat inflation, raising interest rates, does nothing to address the biggest causes of rising prices right now, corporate greed. Keeping rates too high for too long threatens workers' paychecks while keeping other costs high, particularly housing costs. Housing prices and rents continue to go up. It's no surprise that since the Fed began raising rates, the amount of income families need to qualify for a mortgage has nearly doubled. Homeownership has long been a bedrock of our middle class.
This guy makes no sense. He's complaining about inflation, but is putting the blame on the Fed's high interest rates. Like, if really they wanted to combat inflation, they would slam interest rates through the roof and keep them there.
To work financially. Higher interest rates make borrowing more expensive for working families, whether it's for a mortgage or a car or anything else. Most people don't have the luxury of paying for everything in cash. And for the millions of Americans feeling their budgets stretched by higher prices, taking on credit card debt to pay for groceries and other essentials has become an option of last resort. But as more people struggle to pay down their debts, credit card interest rates are reaching all-time highs. Last month, Director Chopra testified in front of this committee and explicitly stated that credit card issuers are charging higher rates far beyond what they need to cover their costs. Corporate greed rearing its head again. Banks are making record.
All right, I'm gonna wait until Jerome Powell starts talking, but already, you know, you're seeing a little bit of a reaction here in the 10-year with this spike. For those of you that have followed my streams and my channel, you know that I wanted to long the 10-year futures from here, and totally forgot about that play. But the 10-year futures long here was a money play. So yeah, I'm not interested in taking any trade on NQ or ES until those lows are taken out. If those equal lows are taken out, the ones that were created during Asia and then 8:30 this morning, if those lows are taken out, then I will start looking for trades. Otherwise, this is like a sit on your hands type of price action so far. And we haven't even had Powell talk yet. So we got to get, and I also heard Janet Yellen was talking as well. Market is tanking. Dude, the S&P's up 0.2 and Nasdaq's up 0.35. What are you talking about? Gold looks interesting here too. Because if the 10-year rises, the dollar rises. So gold saw a little bit of a drop here. But long term, I think gold makes new highs after CPI. I mean, in the short term, I think gold makes new highs after CPI. There's a daily fair value gap here that I was waiting on. Mm. Yeah, gold looks interesting. You can front run along here. Is it my favorite play? Not really. I would much rather see the daily down there get taken out first. You went to the same high school as Janet Yellen? How old are you, bro? That's pretty legit. How was she in high school? Did she smoke a lot of weed? It's me, Riot Cookie? Dude, you're like my age. Oh, I guess you guys went to the same school, but not at the same time. This guy's still talking? Are you in NYC? Yes.
Joe Biden broke this economy, and it's been very difficult to fix it. That's the bottom line. I want to start with the end in mind. Joe Biden broke our economy, and it is very difficult for anyone to fix it. Everyday families are struggling to put food on the table. Real wage growth is being eaten away by rising prices and runaway inflation. Think about the fact that for 52 consecutive weeks under Joe Biden, wages were eclipsed by inflation for 52 consecutive paychecks. I remember back in December 2020, in South Carolina, gas was $1.99 per gallon. Today, it's still $3.19 per gallon, a 50% increase in just a few years. So,
in all fairness, the gas prices has nothing to do with administrations. Oil companies are, I mean, they're their own cartel, and they're pulling in record profits. So it's kind of a sure. I mean, you know, every party wants to blame the other, but no one can control the gas companies. This dude is a clown. They're all clowns. So we got to that low on YM, and I really want to see a sweep here and an aggressive close above, or else this is just going to keep tanking. But yes, it did get to that level I was eyeing. So that low right there, it got to that level. That's the low from Friday. Now we do have the weekly low, but that's right here. I guess I'll draw that level out too to see if that is another potential draw right there. But that's probably the only thing right now that looks interesting. And then if RTY can dig more into this 4-hour fair value gap, that would be amazing. Wow, now we have another bearish divergence between NQ and ES. ES now is the one making the lower high, and NQ is the one making the higher high. Obviously, this is all in the small time frame chart, the lower time frame chart. So this is all in the 1 minute. So you're going to see quite often divergences flip like this. What is oil doing? Ugh, that looks untradeable.
simply double down. Let's take, for example, the tens of billions of dollars of student loan forgiveness, constant new plans to forgive more money, regardless of the constitutionality of their decisions. So it's important to ask, who are these billions of dollars of forgiveness actually benefiting? Well, the answer is simple. This forgiveness scheme will result in debt relief for 750,000 individuals from households with an average income of $300,000 or more. And just don't forget the fact that the average American family has a house.
Anonymous Round says, can you trade futures on Wealth Simple? Simple question. What the hell is Wealth Simple? I have no idea what that is, bro. I don't know. Not gonna judge a book by its cover, but actually, yeah, I kind of am. That sounds like a platform you shouldn't be trading on. Wealth Simple? What is that? That sounds like a Chinese app, bro. I'm not gonna lie. That's almost as bad of a name as Webull, but at least it makes more sense than Webull. Like, I think Webull, I think the goal there was to try to name it like We Are Bulls or We the Bulls. But, you know, in the transliteration crossover, kind of like WeChat, they're like, oh, if we just put a bull in front of the word we, it will make sense. It doesn't matter because, you know, these dumb Americans, all they care about is that they're free transactions. So it doesn't matter what we call it. We can call it fucking Pinkberry trading app. And as long as it's free, they'll still use it. So yeah, I wouldn't trade futures on Wealth Simple. Like, why don't you go with something legit like Interactive Brokers or Tasty Trade, or, you know, I know you guys have Thinkorswim in Canada with certain restrictions, but why don't you go with that? Or why don't you go the funded route? Open up a Top Step or Apex account. You can get 80% off Apex if you use the link in the description, or 70% off Top Step if you use the link in the description. That way you don't even have to trade with your own money. Especially if you've never traded futures, I would go the funded route. Don't try to learn on your own dime. Get funded and trade with someone else's money. Thinkorswim, the minimum balance in Canada is 25,000. Okay. Well, in the US, you don't need, like, the beauty about trading futures is that you don't need 25,000 to day trade. It's the only instrument where you can day trade with less than 25,000. But yeah, I would go the funded route. Open up an Apex account or a Top Step account. I have a whole tutorial on YouTube on how to copy accounts if you want to open more than one. Or go with something like Tradeovate, where the margin requirements are way less. It's $500 for every ES contract, $1,000 for every NQ contract, as opposed to 20,000 and 13,000 respectively. Can I trade on We No Take Your Money Invest? Toss isn't in Canada? Yes, it is in Canada. Thinkorswim is in Canada. NinjaTrader isn't available in UAE. Any other alternatives that can be linked to Apex? Tradeovate, yeah.
Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll gains averaged 222,000 per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54, so-called workers in their prime working years, and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 pre-pandemic level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. A restrictive monetary policy stance is helping to bring demand and supply conditions into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Federal Reserve with operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thank you, Mr. Chair. And the senior member of the committee will begin the questioning. Senator Reid.
Thank you very much, Mr. Chairman. Former President Trump has indicated that he would propose, if elected, a substantial increase in tariffs of between 10 and 60%, and by doing thus, eliminate the federal income tax. First, on the question of what would be the impact of tariff increases on prices, consumers, and the economy?
Thank you, Senator Reid. So I'm going to say that we go very far out of our way not to comment on campaign type information. We just don't do that. We also don't comment on trade policy. We have really specific and important jobs, and we try to stick to those.
Well, I'm glad I allowed you to establish that principle up front, Mr. Chairman. But let me opine a bit. 10% increases in tariffs is going to have an effect on prices in the shop aisle. It's going to increase them because they'll be passed on likely. 60% tariff increases are significant. And in fact, I've been told that to replace the income tax, you would have to raise tariffs across the board 70% to make up for the loss of the income tax, which would, I think, create huge economic problems. I respect your impartiality and your neutrality, but the numbers don't seem to add up to anything that would help the country. Let me switch to something else that might be more within your line of response. You said in your opening statement that labor markets appear to be in a better balance, and that's one of the key factors.
So far, he's obviously just maintaining the same speech that he gives during FOMC speeches. You know, I'm glad that he doesn't. There have been times before where he tries to act a bit dovish in front of lawmakers, and talk about, you know, we are making progress, et cetera, but he's just saying the same old, we'll keep rates higher for longer. I'm looking at RTY here because we did hit 50% of that 4-hour fair value gap. So I want to see if there's a long here.
Opening remarks that is more or less back by most measures to where it was before the pandemic. And that was a strong labor market, but it was not an overheated labor market. So I think the upshot of that really is that we're well aware that we now face two-sided risks and have for some time, but now the labor market appears to be fully back in balance. We know that if we move too quickly, we risk unnecessarily hampering economic activity and possibly interfering with the ongoing expansion. We know that if we move too slowly, that we may undo the good we've done. Well, actually, it's the other way. If we loosen policy too late or too little, we could hurt economic activity. If we loosen policy too much or too soon, then we could undermine the progress on inflation. So we're very much balancing those two risks, and that's really the essence of what we're thinking about these days.
But the direction seems to be going towards lowering interest rates at some point. We would hope that might be a wish rather than a direction.
We took out those relative equal lows that I was talking about. This is what I was saying, that what the target was, and why if Powell wasn't talking, I would definitely have taken a short in the morning to get to those equal lows. We got to those equal lows and took them out. Did ES do it as well? Yes, ES did it as well. You can see the equal lows here from Asia, and then 8:30. We took out those lows. The only thing obviously is that we haven't yet confirmed a move up. And by taking out those lows, we also mitigated the 15-minute the 15-minute fair value gap. And I want to see if we have a RTH gap. Okay. We have a RTH gap here too. And I wonder if ES has the same RTH gap. Yes. So ES almost fully mitigated the RTH. Halfway is all that's needed. Okay, and NQ did as well. So we mitigated RTH, we mitigated those equal lows. Man, I wish Powell wasn't talking. Like, I would want to long the shit out of this right now. Obviously, if we get at least a confirmed close on the 1 minute, we mitigated both RTH gaps. RTH is regular trading hours. What do you think about YM right now? In what sense, bro? What do you mean, what do I think about it?
On those and are very close to agreeing on the substance of those changes. And I can't really be specific because nothing is agreed until everything's agreed, so I won't have a lot of specifics for you today. The question where we're continuing to try to make progress is that of process. So it is my view, it is the strongly held view of members of the board that we do need to put a revised proposal out for comment for some period. And the reason is, when there are broad and material changes, that has been our practice. We don't see a reason to deviate from that practice. It seems to be consistent with past practice and with the Administrative Procedure Act. So that's very much what we think. And we're working through that question with the FDIC and the OCC. We haven't reached agreement on that, but I'm very hopeful that we will. We're prepared to move forward when we do reach agreement on that.
Well, I appreciate most of your response there. I do want to discuss one aspect more of Basel before we move on to another topic. I find it very concerning with how much of this proposal, this process, appears to have been done behind closed doors. The Fed, the FDIC, OCC proposed Basel III endgame last July. Then in October, the Fed began the collection of data to conduct a quantitative impact study on the cost of Basel III proposal, a study which I will note should have been conducted before any proposal was ever issued. Move forward to January of this year, Vice Chair Barr committed to a public comment period once results of the study were published. We are still waiting to view the results. Keep in mind, all the while, we're hearing rumors that the Fed is working on revising its proposal and moving towards an updated version. Please help me understand, how will the Fed revise or reissue a capital proposal before receiving public comments? Basically my question.
Well, as you know, we have received extensive public comments, and we've also evaluated the quantitative impact survey that you mentioned.
Yes.
And so the idea would be when we do reach agreement with the other agencies fully, that we would publish the proposed changes and also the quantitative impact survey, and also the effects that the QIS suggests that the changes would have. So we'll put all that out for comment again for a period of time, and then having had yet another round of comment, and we can then move toward finalizing. That's basically the broad strokes of how I would see this moving forward.
And how long do you see that opportunity for public comments?
So it would be meaningful. I mean, it might be 60 days. We don't need to it doesn't need to be a long one. But, before we do that, there's a lot of work that needs to take place, before you actually put out the revised proposal, quite a bit of work. So it will take some time, and then we would put it out, and then there would be, I'm just taking that number, 60 days of comment, and then we would get the comments back, and there would be another period of evaluating the comments, and only then would you go final. So there are a number of steps here.
Okay, thank you. Well, just final point as I'm running out of time here. I think Senator Reid made the comment about the Chevron case and the impact that it could have, certainly in curtailing, from my perspective, the regulatory state. The necessity of a cost-benefit analysis on new regulations that will impact the economy, I think, is quite helpful. In the thousand-plus pages of Basel III, I think there were about 20 pages that reflected some kind of cost-benefit analysis approach. I would really hope that we see more of that going forward.
Thank you.
Senator Tester from Montana is recognized.
Well, thank you, Mr. Chairman. Thank you for the.
All right, so I'm interested in a long here for sure. In my prop accounts, because they are copied, I have to be a little bit more diligent, right? In my real money account, I took a long on NQ here. That's up 540 per contract. So, well, almost up 600 per contract. So I already long this, kind of a turtle soup type entry. But on the prop accounts, I have to be a little bit more diligent here. I do think we get to this high at least. There is a lot in our way, but I do think we get to this high at least right here, which is at 27.62. We have an inverted gap down here. We took liquidity at the RTH gap. We took liquidity below those relative equal lows. Obviously, Jerome Powell's talking. Anything can happen. It is risky trading news, so size however appropriately for your account. But I do think that we get at least, I will say, up to 27.4750. What is he saying here?
Specific things we're dealing with now.
So let me drill down a little bit. I'm speaking not necessarily from a housing cost interest, and you're correct on the things you just brought up. I'm speaking more from a standpoint of economic growth, and that there are plenty of small businesses, schools, hospitals, Main Street businesses that can't hire people, they can't expand because there simply is no place for them to live. How does that fit into your economic outlook metrics? Because I think it's, from my perspective at least, I think it's limiting the opportunity for expansion. It's limiting the opportunity for entrepreneurs, business startups. And
if we close above this 5-minute fair value gap here, I don't know whether they're asking him about small businesses and whatnot. It's not his purview. But if we close above this 5-minute gap here, there's 43 seconds left until candle close. Then I think we're on our way back up. If not, we do have some imbalances down below. Like we do have a daily fair value gap here. I personally don't think we'll get to it just yet. To me, this still looks like a long, and again, obviously, when Jerome Powell's talking, anything can happen. We have Yellen, I think, talking after him. But in normal circumstances, to me, this is a clear long. I move my stop to break even on my real money trade here. So worst that can happen is that I get out. Oh, that was the entry, I think.
Order submitted. Order submitted.
Operational independence, and that just means that we make our decisions, we're instructed to make them without taking in extraneous factors, one of which would be politics. And the record is pretty clear that that's a good it's a good institutional arrangement that serves the public well. And We just want to stress, as we do periodically, that this is an institutional choice that we make as a country, and that as long as it's seen to serve the public well, it's a good choice. We think so.
Okay, on advanced economies, there's some that talk about the economy of this country not being in very good shape. From your perspective, tell me how the economy of this country is doing compared to other advanced economies that have central banks.
You know, so I'm in lots and lots of international discussions as part of my job, and the story for the last 2 years has been just how exceptional the performance of the U.S. economy has been, and that's not a secret. You know, clearly the U.S. economy has performed very well compared to sort of our advanced economy colleagues.
Is there any country in the world with a central bank, any advanced economy that's performing better?
Better as a central bank?
No, any economy that's an advanced economy that has a central bank that performs better than us?
You know, none comes to mind. As I think of the majors, the answer would be no.
Okay, thank you.
Thanks, Senator Tester. Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. Mr. Chairman, first of all, thanks for coming in again and visiting with us. I just want to focus on two specific items, and I'm going to start with the Basel III endgame discussion. I think Senator Scott did an excellent job of kind of laying out the concerns that many of us have had with it. I would like to go back into just one particular issue, which I think a lot of folks out there that follow this, and I know it's technical in nature, but let me just ask a specific question, and you can kind of pick it apart for me, please. Both you and Vice Chair Barr confirmed that there will be material changes to every risk type outlined.
It's currently up around $700 here. I have my take profit. I'll show you where my take profit is on this trade. I have it below this high. I have it at 27.52, which is this low here, which would complete this entire fair value gap. And I have my stop at break even. So like I said, it's a free trade. Now, obviously, $700 could be a lot, depending on what your daily profit goals are, whatever. But for me, this is a clear long. And if Jerome Powell wasn't talking, I would just hold this until we get to that high. I'm still willing to risk it because the profit is about $1,200 per contract, which is good enough for me. And I would likely then, sorry, I lost my train of thought, which is good enough for me. I really want to see us I don't know when this speech is done, and I don't know if Yellen is going to testify. I know she's talking somewhere because it's on the economic calendar. But depending on when this is done is going to determine how long I hold my position, because what typically happens is the minute that Jerome Powell walks out the door, we get a strong reaction. And I wouldn't want to still be in this trade that's up $700. The fuck?
What the parts of inflation are and what parts you can control and what parts, as the Fed, you really can't control. The demand side of the equation on inflation is the part that you have the tools to work with. But there is the supply side of the equation, which is still out there. And I want to just lay this out because as we do this in this setting, it naturally becomes political in nature because one of the...
Mr. J says Z is having a Biden moment. Motherfucker, your mother is having a Biden moment. She walks around the house shuffling her feet. The other day, she was trying to make me eggs, and she forgot that the stove wasn't on, bro. It was just 2 eggs sitting in a pan like that. You're gambling, bruv? God, people are so stupid. Doug, I've been calling out my thesis for a potential long this whole time. This is not gambling. We took out relative equal lows, 15-minute fair value gap, right? We had a close above the 5-minute inverted gap. This fits all of my criteria. What the fuck do you think? Why would you call this gambling? I do see that we do have a 5-minute gap here, which could pose an issue. So I might move my take profit to 20. 2747-ish.
That's a question that we've thought about a lot, and any attempt to reduce that to a precise number would be inappropriate because it's so uncertain. But I think we can say, I believe strongly, there's a significant demand element and there's a significant supply element, and we've seen the supply side heal so much over the course of the last year or so, and we clearly see that that's contributing to lower inflation. We also see cooling demand, for example, in the labor market. So the two forces are working together. I can't really break it down. It would be such an imprecise estimate.
Just simply an acknowledgement, though, that it is both demand.
It's both. It's definitely
and
both.
it is supply.
It is both. Yeah, for sure.
Thank you, Mr. Chairman. My time has expired.
Chair Powell, unemployment has risen by 0.5 percentage point over the past year. The number of job openings has dropped almost 50%. The hiring and quit rates are now below pre-pandemic levels. I'm concerned that if the Fed waits too long to lower rates, the Fed could undo the progress we've made on creating good paying jobs. Full employment is part of the mandate, as you say over and over.
Bro, I hate this guy. Let's check on YM real quick. Oh shit, it did make a nice move. I mean, we are already in NQ, but YM made a very nice move. That's what I was waiting for, taking out those lows. This is why lows and highs are so important. And guys, when I release that free ICT course, you guys better watch it on YouTube. But I talk about, there's a whole section on liquidity, right? How to identify these lows and highs. And why they're so important for taking trades. Like, why am I waiting for this low on YM or that low on NQ before taking a trade? So make sure you guys watch that when I release it, because it will answer a lot of questions that you have as to how I take these trades. What is ES doing here? Oh my God, it's creating another bearish divergence. All right, I saw the bearish divergence, so I ended up closing my trade here. Took my profits at 605, and we'll look for another trade. But the reason is because of that bearish divergence. I think it's really important to be dynamic about with your trades, right? So I saw that ES was creating that higher high, but NQ was suffering here with this massively lower high. So to me, that is super bearish. But remember, we're dealing with low time frame, so that is bearish for the low time frame, which is the reason that we saw this drop here. But we dropped into, back into that IFVG. So it's when you're looking at low time frames, you have to view things in a low time frame sense. So that bearish divergence there that we saw was good for the low time frame. It's not necessary that it maintains the whole time, right? There is probably another long from here now. But I didn't want to suffer through that drop and lose all of my gains. And actually, my stop limit was at break even. So I would have taken $0 as opposed to 600 and change. So I hope that makes sense.
Do whatever it can to help make money available to those depositors. We also, as you may know, did an enforcement action against, before this all happened, we did an inspection or looked at Evolve, and we hit them with a
Dickhead with the Aiden Ross tag. My stop didn't hit because I know how to manage my trade, bro.
We're watching. The Fed needs to use its supervisory authority to.
Why don't you do something better with your time, dude? Actually go learn how to trade as opposed to trying to be an armchair quarterback. Yeah, man. Haters, they just sit there and wait for you to make a slip up, right? So that they can say something. This is usually the product of having no personal achievements in life. I think there is another entry here on YM. When's the ICT video out? I said, give me a minute, bro. It's getting edited. I'm a big fan of your channel. Don't leave in December. What? Why would I leave in December? Up 2K in that move. Meanwhile, Aiden sitting in his mom's basement. Yeah, bro, he's giving his mom a foot massage. That's his goal for today. There's one item on his calendar. Give mom foot massage. What country are you in now? I'm in the US. I'm really looking at this YM trade here. So when's the next rate cut? Probably November. It depends, Niblet, on what type of model you're trading. I mean, you could have tried to turtle soup, right? This long on YM, which means that as soon as it took out this liquidity, you would have entered a long. You could have waited for this to create a bullish fair value gap, trade back into it like it did here at 1026 and taking that long. Yeah, there's quite a few entry models you could take. If you are, a more cautious trader, you could wait for something like a 15-minute fair value gap to trade into, right? But we clearly power of three'd into this. We had consolidation, manipulation into those lows, and now we have an expansion, and we will most likely on YM get to the consolidation level once again, at least, right? This is a typical power of three. I don't have a position in Chipotle yet. I am looking to form one. This is not a Fed meeting, bro. Celsius at one point to me looked like it might be due for calls. Still maybe. Maybe leaps, not short-term calls, but for sure selling puts, yeah. I think selling puts on Celsius down here. I mean, but you know, look at the company. If you don't like the company, don't sell puts on it. Don't just sell puts on random companies. Chipotle reports earnings July 24th. I think a good strategy would be to sell puts, because if it has bad earnings, say, and drops like another 10%, then you would get assigned. If it has good earnings, you would keep the money for the puts. I actually, you know, I don't mind. I need to take a look at its financials. Let me not say anything here. I need to take a look at its financials, which I haven't done in a while, but it's down 15% after the split, which is typically what you see after a split, right? You get that 15, 20% range. So I definitely want to buy back. Yeah, I need to take a look at its financials, bro, which I'll do after this, and I'll put my my analysis in. I'll put my analysis in the Discord. This is where I put all my stock analysis. So TLT, Tesla, Apple, Google. So I'll put all my stock analysis here. So if you're a member of the trading floor, you'll likely see it today. I'm going to do a deep dive on Chipotle, as well as Nike. Oh man, thank God we took profits on this. Thank God we took profits on this. That SMT divergence scared me. Oh, someone asked me what SMT divergence is. Okay. So between ES and NQ, right? They're seen as sort of like brother and sister in terms of indices, right? When one makes a higher high and the other one makes a lower high, this is called SMT divergence, right? Or just divergence, whatever you want to call it. And when we're dealing with the highs, this is bearish. So one makes a higher high, one makes a lower high, this is bearish. When we're dealing with the lows, right, and one makes, so say right now NQ makes a higher low here. Let's just say that ES made a lower low, right? So if this low was down here, that is called bullish SMT divergence. Now it doesn't mean YOLO a fucking long or a short. It just means that if you take that into account with your other analysis, it's something that is extremely valid, right? So when I saw that huge SMT divergence with ES and NQ, where ES actually made a new high or close to it, right? And NQ was struggling down here, then I had to take profits on that. Did any of you guys take that long on NQ? You sound like the perfect mentor. Thank you. Thank you. Shout out to those of you who are going to be in the mastermind tomorrow. it's not a pre-recorded thing. Like, I teach the Mastermind live. It goes for 4 weeks, 8 classes, 2 classes a week. So Mastermind 7.0 is starting tomorrow. Up 1,300 on Apex accounts? Hell yeah. We need to talk, says adopt me. Come on, bro. I'm not that old. Tarmo. I love you so much. I left my wife just for you. What am I going to do with you? I want to check on gold too. RTY finally in that 4-hour fair value gap, but it is currently the weakest of all the indices. I wonder if there's a long here soon, maybe in the PM session.
Faster where it's appropriate, more forceful where it's appropriate. And I think, you know, they've taken a pretty deep dive and tried to learn these lessons and then implement them in a way that is appropriate. So that's a big project going on at the Fed right now, which really Vice Chair for Supervision leads.
I think I remember lots of conversations.
I might take a broad long on YM if it gets here. Yeah, I might take a broad long on YM if it gets here. I'm going to set an alert. I'm not going to enter a trade just yet because I want to see how it gets there. But I'm going to set an alert just above this and see if it alerts me. YM is the Dow Jones, by the way. Oh my God. Whoa, this guy looks like a corpse.
And hospitality jobs have slowed almost.
Fuck, he talks like one too. Shit.
There was a desperate worker shortage, and they've done quite a bit of hiring, but they're catching up now.
I mean, three-quarters of the jobs that are being created in our economy can be related directly or indirectly to our spending deficits, can't they?
In this report, in this single report, I don't know that healthcare is really government spending. I mean, that's something people are
Where do
consuming.
you think these hospitals get their money?
They may get it, but I mean, people are not. the spending on healthcare is not necessarily directly related to deficits, is my point.
I would disagree with you. I mean, here's my point. We talk a lot about expectations in terms of inflation. How if we expect there to be inflation, we'll get inflation. It seems to me that consumer expectations play a bigger role in the economy than we cede to them. Most of our economy in America is consumer driven, is it not?
Yes,
Unlike, say, China, which is manufacturing driven.
very much so.
And I listened to you cite the statistics about the economy, but most Americans don't feel good about the economy, do they?
No, and we don't tell people how to feel about the economy.
I mean, isn't it a fact that most people, if you ask them to define Bidenomics, they would say that's easy. We get to pay more to live worse.
I wouldn't touch
You don't want to answer that
a sentence with that word in it.
Yeah. Yeah. I mean, we can pretty this up all I guess my point is, and I know you're going to do this anyway, but I'd be really careful with this economy. I mean, people just don't feel better off today. And one can marshal a persuasive argument that, well, you should, compared to Europe or compared to China, compared to Canada. But feelings are feelings. People don't feel good about this economy. And it's primarily because of inflation. Let me use my final 30 seconds to ask you.
I think gold has a little bit more to drop. We didn't get to yet a significant enough level here, right? So if you look at the high time frames, you still have a 4-hour fair value gap here, right? We haven't even taken out this low from Monday. We rejected off this gap, but where did we go to after that, right? You want to see this take out something more significant. And I think this low right here is the minimum for me. This would be ideal down here. So I think there are short-term scalps here, like short-term longs that you could take to up here, right? I don't see a significant draw on liquidity yet on the sell side to warrant a massive long here, right? You could play these short-term moves from small-term fair value gap to small-term imbalance to small-term to low time frame liquidity levels, but I don't think there's enough for a major broad here yet. Now we're getting into a touchy subject. Well, he obviously doesn't want to talk about anything to do with any administration, and I give him credit for that because he's not supposed to, right? Took GC long on that FVG. You better have a very tight target. There's nothing in my view here to warrant a significant long. In my view. Apple has been green almost a week now. Do you see it pulling back a bit? How could I tell you? What in technical analysis would allow me to tell you when we will see a pullback in Apple? That's not what I'm concerned with. I mean, people really should focus when they're doing technical analysis, right? Like what people want out of technical analysis is for it to be a fortune teller. And what technical analysis is really is you actually waiting for certain levels to get hit. That's what technical analysis is. right? People want it to be a tool where you can somehow predict what price something will be on what date. And that's just not the case. Like even when we're day trading, I know sometimes it looks like magic. When I say, you know, once this level's hit, I'm going to go long. But I'm still basing it off of something happening first. I'm not looking at this saying, you know, I predict this is going to be this price on this date. I'm saying if price comes here, then I think that will justify a long, right? And here are basically liquidity levels. Like I said, Mastermind 7.0 starts tomorrow, which we will dive into this stuff. But you know, you can't just look at just a chart like this and be like, oh, when is Apple going to pull back? How the fuck should I know? Look at Apple. Like this is just inching into all-time highs, like all-time high, all-time high, all-time high, all-time high. Like what would allow me to tell you when we will see a pullback? Nothing. There's no tool we have that will allow you to see that. So I hope that makes sense. Respect your president? No, dude. You don't have to respect your president. See, this is what I was saying. I feel like GC has more to drop. All presidents are crooks, man. All presidents are crooks. I posted something here. Someone had posted something this morning, right? Saying, notice a pattern. Reagan, recession. Bush Sr., recession. Clinton, balanced budget. Bush W., the Great Recession. Obama, rescued the economy. Growth. Trump, adds $7 trillion to deficit. Unemployment at 14%. Biden, rescued economy. Fastest economy growth in history, right? Now, while it is true that most recessions have happened under Republican presidents, that isn't necessarily telling the whole story, right? And I'm not a partisan on any level. Like I'm cynical of the whole system, right? And I said they're all crooks. This is a real chart you should be looking at. The U.S. debt rises irrespective of who's in the White House. So the U.S. debt went from almost zero to rising steadily under both Democrat and Republican presidents. No one gives a fuck about the future generation, right? Continuing to pile on debt to where we are at now, which is higher than, this is 2023. We're now, I think, at 36 trillion. And this has happened under both presidents. We've never seen a decline in this, right? This is the real chart you should be looking at. That's why I say they're all crooks. Some more than others. I mean, I really, to me, I don't trust any of them. How far can U.S. debt go before something drastic happens? They'll just keep raising the debt ceiling until people stop buying treasuries. And then when Japan and China stop buying treasuries, you'll start to see shit crack. RTY getting interesting, guys.
Our job, of course, is the whole economy and inflation for the whole economy. And the absolute best thing we can do for younger people is to restore price stability so that as we benefit.
We out of CELH? The hell is this guy talking about? I never took a CELH trade, dude. I took one trade. It was on NQ.
Stable interest rates, relatively low interest rates. We want to get back to that, and that is what the Fed's job is that we're not supposed to look at the housing market as separate from the overall economy. In the meantime, though, there's no question that higher interest rates are making it harder to buy homes in the short term. But in the longer term, this is the best thing particularly for younger people who are not yet in the housing market.
Let me sort of in line with that community, constituency, population, and definitely aligned with the concerns of my state that's actually facing some severe climate impacts, just as we speak with wildfires and our colleagues and fellow Americans in Texas and the impact of the hurricane. I wanted to pull in your sort of thoughts about the Fed pilot on the climate scenario exercise. In May, the Fed conducted a pilot climate scenario exercise and asked the 6 largest U.S. banks to examine their balance sheets and how it would be effective if a large hurricane hit the Northeast. They reported facing data gaps on property characteristics, their counterparties and insurance coverage.
I love how they act like Jerome Powell is a weatherman, right? Like they talk to him about all kinds of shit. Hurricanes. They talk to him about immigration. They talk to him about the trash in New York City, which is horrible, by the way. 2024, New York still doesn't know how the fuck to do trash. It's just plastic trash bags in the street that rats can tear into. I look at it and I'm baffled that in 2024, the richest city in the entire world just leaves plastic trash bags on the side of the road. No containers, no nothing. I don't get it. Oof, there was no warning on CL. That was a straight up just turtle soup right there. It's actually perfect as a metaphor. Yeah, you're right. I think that gold is going down here. Here. So if you want to short it in a discount to get there, you can. It is risky-ish, but you can have a tight stop, right? So if you shorted, we do have a breaker here too, by the way. But if you shorted off this breaker fair value gap, you are shorting in a discount, just know that. But you can have a tight stop, right? So your 2-to-1 would be there. And your ultimate TP would probably be, that would be your second TP if you have multiple contracts. And your third one would probably be there. Yeah, I don't hate it. I mean, I don't hate it. It's just you're shorting in a discount. So by nature, it's suboptimal, right? But I do think that's the drawdown there. Do you have any promo codes for the Mastermind? No, not at the moment. Unless you're already in the Discord. If you're already in the Discord, then yes. If you are not, then no. But if you're in the Discord, I mean, I like to be nice to people that are in there, so just hit me up and I'll send you one. But if you're not in the Discord already, then no. What is the name of the company where you can deposit money into an investment account, but you can also borrow those funds to trade at the same time without getting the funds out? You could do that with Charles Schwab, right? You could deposit into SWVXX, which is their mutual fund, and you can use those funds for trading as well. Yes, I use ICT concepts. Why, when I go to sell an option, I have to pick a decimal instead of just the price I want to sell an option at? Oof. That is a question that lets me know you probably shouldn't be selling options, bro. You probably should study a lot. You probably should be taking paper trades. Do not sell options if you are asking that basic of a question. One, that question doesn't even make sense because you're supposed to sell options based on the current bid-ask price. And obviously, you're almost always going to have a decimal point. The options aren't priced in whole numbers. Options aren't priced in like $1, $2, $3, $4, $5. Options are priced with decimals. So that already lets me know that you probably shouldn't be selling options just yet. You probably should be reading, practicing, paper trading, getting the hang of it. Why M coming down? I'm looking straight at it, bro. It's right in front of my face. Is Powell done?
By getting the banks to take on more risk, they run.
No, that's Elizabeth Warren's voice. I don't even have to look. I already know that's her.
It happened in 2008 and it happened again in 2023. Back in 2010, though, Congress passed the Dodd-Frank Act. Section 956 told financial regulators solve this problem. 2 months ago.
Man, there's something wrong with the the lighting in here. AKA Karen. Yeah, we call her Congress Karen. She's gonna start yelling at him about rates and how rates should come down, and then she's gonna hop in her private jet and go to a Taylor Swift concert with her daughter. Tarmo says Z has a crush on Warren. Yeah, dude, she looks like your mom. That's why I have a crush on her. She reminds me of a special lady I know called Tarmo's mom. You could tell Jerome fucking disdains her thing. He probably has one of those, what do you call those? Stress balls. just for Elizabeth Warren's questions.
Very specific,
Yeah,
narrow
it is a
question
very
you're
specific
asking
thing,
about.
because it's something a regulator should do. You think the answer is 10 out of 10? The answer is 0 out of 10.
Yeah, I doubt that.
Well, go back and look, because we've looked at their statements on this. Another thing the proposed rule would do is require the banks to consider flat out banning bonuses and bonus pay for executives who
Bro, he hates her so much.
of the bank. So let me ask you this one, Chair Powell, in the 6.5 years since you said trust the banks to regulate themselves, how many of the 10 biggest banks now have policies that would require them to flat out deny bonuses to executives that have engaged in inappropriate risk-taking?
I don't know the answer to that. By the way, I never said trust the banks to regulate themselves.
I'm sorry, do you want me to go back and quote you again exactly?
Trust the banks to regulate themselves?
When you say, I expect that the banks will have in place compensation plans that do not provide incentives for excessive risk-taking.
Right, pursuant to the guidance that we issued in 2010, which is quite detailed.
And you have not issued a guidance since you made these comments, since you became chair. And how many banks have actually put in place the regulations that you said, I expect the banks will have in place? The answer is, out of 10,
it was covered
0.
by the 2010 guidance.
No, you said in 2018 that they would put these in place.
I said they would have in place.
No, that is not what you said. So look, Chair Powell, the last guidance on this subject, as you say, was in 2010, which is before you were at the Fed. The Fed has now refused to join the other financial regulators in finalizing a rule implementing Section 956 as Congress directed. So my question has been, how many of the 10 biggest banks have done this? And the answer is 0. Dodd-Frank was passed 14 years ago. There are still no rules to stop banks from rewarding executives' risky behavior. When you were asked about these Section 956 rules or lack of rules in March of this year, you said, quote, that you wanted to understand the problem we're solving before proposing a rule. Chair Powell, the law does not say Jerome Powell, in his infinite wisdom, should decide if we have a problem with executive compensation. The law passed 14 years ago says executive pay is a problem that threatens the stability of our economy, so write the rules to rein them in. Finally, the other financial regulators have proposed such a rule, but the Fed has not joined. Chair Powell, I understand why the 10 biggest banks in the country like your approach. You let them do whatever they want, but you don't work for the giant banks, you work for the American people. I urge you to do your job. Thank you, Mr. Chairman.
Senator Vance from Ohio is recognized.
She said you don't work for the giant banks, you work for the American people. No, motherfucker, the definition of his job is working for the giant banks. The Federal Reserve is a completely private central bank that is not tied to the government.
Extremely high illegal immigration levels under the Biden administration and the persistence of the inflation problem. And I recognize this is not your policy focus, but you are the Federal Reserve Chairman, so I just want to get your views on this. And in particular, I want to read you a quote from Mickey Bowman, who's one of your governors. And this says, in a quote, "There's a risk that increased immigration and continued labor market tightness could lead to persistently high core services inflation. Given the current low inventory of affordable housing, the inflow of new immigrants in some geographic areas could result in upward pressure on rents as additional housing supply may take time to materialize. With labor markets remaining tight, wage growth has been elevated at around or above 4%, still higher than the pace consistent with our 2% inflation."
Oh, man. I know YM is here. I have no interest in longing this right now. If you're just joining the stream, we took one play, and it was on NQ that we ended up closing out here took it from here to here. And I haven't taken another trade yet. Markets look honestly atrocious. I don't mind this YM trade. I don't know. I think we'll find, now that it's 11:30. How long does this go for? Does anybody know? Hell yeah, we have more people watching us than CNBC. That's crazy, bro. That is crazy. But Yellen is going to talk after this. Man. Is she talking at the same time? Oh, yeah, she's talking at the same time.
Red Tape Relief Act, which would extend.
There's like one person there. Everyone's there to watch Jerome Powell.
So far, and they are engaging in a very extensive outreach and education effort, and it's
This immigration problem, I think, is having very.
This is annoying me, bro. What's annoying is that we're gonna do this all over again tomorrow. And then Thursday, the real fun starts with CPI, and then Friday we have PPI. If you guys want me to stream every day, give a thumbs up. Let's get this to 500. If you get this to 500 likes, I'll stream Wednesday, Thursday, and Friday. Otherwise, I'll just go live in the Discord. If you get this to 500 likes, then I'll stream on Wednesday, Thursday, and Friday. Harsh says, Akash Bhai, Indian streamer will never reply to you in this way. What are you talking about, Harsh? What are you talking about, bro? An Indian streamer would never reply to him in this way? You're talking about the guy that spammed the chat 1,000,000 times with the same question? Sachin, what's your last name? Sachin Kadlaskar. Sachin Kadlaskar? There was a famous cricket player in India, Sachin Tendulkar. That's what I thought your last name was. I was like, man, we're graced with the presence of Sachin Tendulkar. Sachin Kadlaskar. That guy played in the minor leagues. Tesla's going crazy, man. There's so many people in my last video that were laughing about how they're shorting it. They got burnt. Do you watch cricket? Hell no, bro. I don't watch cricket. I don't watch baseball. You expect me to watch cricket? But I know who that is. This does look like another potential long here. I'm afraid that we won't get optimal price action though until this fool stops talking. Oh, okay. Hold on. So remember how I was telling you guys about divergence? So this is what I was talking about. This is bullish divergence. NQ made a high, ES made a higher low, and NQ made a lower low here. There might be a crack at a small long here. 10:30. What time is it? 11. Okay. Yes, please weigh in on Palantir. Oh my God.
I do, even more so than in March when we were here, see that. So we've seen, and I think the latest data show that labor market conditions have now cooled considerably from where they were 2 years ago. And I wouldn't have said that until the last couple of readings. And I would say also that for a long time, the risks were more that we would fail to hit our inflation target. I think the risks as to the two statutory targets we have, price stability and maximum employment, I think those are coming much more into balance. My colleagues and I are looking at that, and we fully understand that we have to manage this process of administering the federal funds rate and deciding what to do with it in a way that manages both of those risks. And the two mandates are equal under the law, and so yes, we do get that.
Well, I appreciate that, and I appreciate the fact that you've seen that sort of.
Yeah, there's if you look at the 1 minute even, there's very suboptimal price action here, right? Like even with the breaker, the fair value gap, we are blowing past these levels really easily, and we are coming into lunch. So I personally would not take a trade on the indices here. I personally would not take a trade on the indices here. YM being the only one that, in my view, is longable at the moment, and then potentially RTY. Potentially RTY, but YM is the one that looks longable to me. I'm not taking a trade on NQ and ES until after this clown show is done. I'm in Tesla put from 260. Hope it works out. Bro, it's not a fucking casino, bro. What do you mean, hope it works out? Have a solid thesis for your trades, guys. Don't just try shit, right? Like, you wake up, you decide, I'm gonna try the put here. I'm gonna try a call here. Oh man, like it's down 30%. I don't know what to do. Last time I tried it, it worked out. The last 4 times I tried it, didn't work out. My profitability, my balance is not really moving. I'm just waking up and trying stuff every day. That's not how shit works, man. Turn into a real trader. Don't just try shit. Trade with an actual backtested strategy. Take that trade every time. Next event scheduled at 1. What is the next event scheduled at 1? 1:30. Bowman speaks, but I don't think that's important. I think there will be a really nice PM trade if this shit is done. CL missed long? The hell? I mean, there could be a long, but you didn't miss anything. What are your psychological rules in trading? Oh man, that's too big of a topic, man, for me to talk about it in here. Just follow me on Twitter and Instagram. I post about that stuff every day.
We did. You know that we put in place pretty serious guidance back in 2010 after putting it out for comment. We looked at all these questions. It's been in place for 14 years. We supervise on it. And, so the question I'm asking is, okay, let's go out and look at what the practices are that are happening now, not that are happening before the global financial crisis when it was obvious that things needed to be changed. And we put the guidance in place. It seems to have largely worked, certainly as it relates to the large firms. And then let's design something that is designed to the residual risk as opposed to just taking something off the shelf from 15 years ago and doing that. So and we're working on that at the Fed now. And again, the statute requires us to prescribe regulations or guidelines to prohibit those things, and I want to do that. In a sense,
I think Nvidia gets to at least 150 soon. A mastermind session on psychology would be great. Yeah, I'm thinking of changing one class in the mastermind, which is on option selling. Thinking of changing that to psychology. For sure. How about AMD? What about it? Gold. What about it? Buy gold? Like physical gold? All right, well, we didn't get to 500 likes on the stream, so I'm not going to be streaming Wednesday, Thursday, or Friday. I'll be streaming in the Discord only Wednesday, Thursday, Friday. If we get to 500 likes, I'll stream here Wednesday, Thursday, Friday. But we didn't get to 500 likes here. So I'm just going to keep it in-house. I think there is a broader No, I won't say that about oil just yet. Like I said, I think gold is going to get down to this level here. So I wouldn't long it until we get there. For Discord, you got to be subscribed to watch? Yeah, of course. Or else what kind of service would that be? Depending on where we close today, if we close below yesterday's close, then I think we'll be my daily bias for the following day. Like if we close below yesterday's close, I think my bias for tomorrow will be short-term bearish. The thing is, if you look at CPI for Thursday, which, oh, we got to 500 likes. There you go. I guess I'll be streaming on YouTube. If you look at CPI on Thursday, you'll see that the forecast is 3.1. And if we meet that or come below it, then I think the dollar is going to tank and you'll see gold and stocks rally. But that is a very ambitious target, 3.1. Let's see. Something tells me we will meet or beat it. I don't think we're going to come higher than this. It'll come at 3.1 or below. Something tells me that. But I do want to see where we close today. And I do think that after this clown show is done, we will have an optimal trade. For those of you that just joined us, we did take one trade in NQ so far. And that was it. I banked something like 600 and change per contract. We took one trade in NQ and that was it. So 1 for 1, small-ish trade, but not mad at it. Didn't take another trade. And I think in the PM session after they're done, I think there will be an optimal trade, which I will send out in the Discord, obviously, if I take. Oh, that YM trade is working out nicely. It would have missed my entry though by a tick. My entry was here at 39,525 and it got to 39,528. But I still think there's a potential long on both RTY and YM. I'm just gonna wait until they're done talking and then look for a suitable entry. Please talk about how you share your trades. Like this. Huh? The charger? I think yours is over there. Isn't it? This is what the trades look like. Do you use OCO? Yeah, of course. All right, guys. Powell is still talking. I think they're going to go through lunch, but I'm going to be taking a trade for the PM session after lunch. Like I said, we took one NQ long, and that was it. I think RTY and YM look the best at the moment. That might change after Powell's done talking. If you want to apply for the Mastermind, that link is in the description below. We are starting Mastermind 7.0 tomorrow, where we go over all of this stuff, how to draw liquidity, how to find which fair value gaps to trade off of, how to set your stop loss, your exit, etc. And then more advanced entry models, obviously. So be sure to sign up if you want to apply for Mastermind 7.0. Otherwise, come and join the trading floor where we stream live every single day at market open. You guys got this to 500 likes, so I'll keep my my word and I'll stream on Wednesday, Thursday, and Friday. Please give the price. Just click the link, dude. Just click the link. And if it suits you, I'll see you there. If not, oh well, doesn't matter. But I'll send out my trades after this. So yeah, thank you guys for joining. I'll see you guys. If you're not in the Discord, I'll see you guys tomorrow. Peace.